Let's be honest. Have you ever stared at a financial chart, one of those ones with all the lines and jargon, and thought, what on earth am I even looking at? Well, today, we're going to break one down. We are going to decode a professional technical analysis report piece by piece so you can see exactly how these things work.
So this is what we're looking at today. It's an advanced technical analysis for a company called the Federal Bank. And yeah, at first glance, it looks pretty intimidating, right? You've got charts, indicators, a bunch of technical terms, but I promise, by the end of this, you'll know exactly what this report is telling us.
So, if you had to boil down this entire super detailed report into just one single word, what would it be? It's this one right here. This is the punchline, the single most important takeaway from the whole analysis.
Okay, so let's start with that bottom line. The analyst's core recommendation for this stock, looking out over the medium term, is positive. Plain and simple.
To be super specific, the report says the stock is, and I'm quoting here, technically positive for the medium-long term. Now that just means a period of about 1 to 6 months. This is the main conclusion, the foundation everything else is built on, so the vibe is optimistic. But why? Let's get into the evidence.
All right, so how did the analysts land on positive? Let's break down the specific signals they're looking at. This is the evidence behind their outlook, the why behind the what.
First up, we've got something called a rising trend channel. Just picture two parallel lines sloping upwards. If the stock's price keeps bouncing between those two lines, kind of moving up from the bottom line to the top one, it's a really good sign of sustained investor optimism. It's almost like the stock is walking steadily up a staircase.
And you can see it right here on the actual chart. See those two purple lines the analyst drew? The stock price for the Federal Bank is moving clearly upwards, right inside that channel. This is the first big piece of positive evidence that the report points to.
Next, let's talk about a resistance level. The easiest way to think about this is like a price ceiling. It's a point where, in the past, the stock has tried to go higher but just couldn't. It got pushed back down. So what happens when it finally smashes right through that ceiling?
Well, that's exactly the second positive signal the analysis found. The stock has broken a resistance level. And in the short term, that's often seen as a really powerful sign. It suggests that a barrier that was holding the price back has now been removed, and it's got room to climb even higher.
And the third bullish signal is something called positive volume balance. This one is all about the conviction behind the price moves. All it means is that more people are trading the stock on the days its price goes up than on the days its price goes down. Basically, it confirms the trend. It shows there's real energy, real enthusiasm driving that price up.
Okay, so we've got 3 strong positive signals, right? A rising trend, a broken resistance, and positive volume. Sounds like a slam dunk. Well, not so fast. A good analysis always looks for the counter-argument. And this one found something we need to talk about.
So the big question is every single signal pointing up? Turns out the answer is no. There's a little wrinkle in this story. The report flags one note of caution: RSI Negative Divergence. Now that sounds super complicated, but the idea is actually pretty simple. It's what happens when the stock's price hits a new high, which sounds great, right? But a separate momentum indicator, the RSI, doesn't hit a new high along with it. This mismatch, this divergence, can be an early warning that the upward momentum might be running out of steam.
Think of it like this. On one hand, you have the price itself, which is pushing to new peaks. But on the other hand, the momentum behind that price is starting to lag. It's like a runner who's still moving forward, but their strides are getting shorter and shorter. It's a subtle but really important reason to be a little cautious.
And the report is very direct about what this could mean. It says this divergence indicates a, quote, danger of a reaction downwards. So while the overall picture is still positive, this is like a potential storm cloud on the horizon that the analyst is making sure to point out.
So how do we put all of this together? We've got a bunch of strong positive signals, but we also have one pretty clear warning. Let's weigh the evidence, just like the analyst did, to get to the final picture.
So here it is, the entire analysis in a nutshell. On the pro side, you've got the stock in a clear rising trend, it's punched through a key resistance level, and the trading volume is backing it all up. But on the con side, you've got that negative RSI divergence whispering a little word of caution. The analyst took all this in, weighed it all, and still came out with an overall positive rating, but with that important caveat built right in.
So what's the key number to watch? Well, the report points to a support level around 215 rupees. You can think of this as the floor or maybe a defensive line. If the price were to dip, this is the level where the analyst thinks buyers might jump in to hold it up. It's a critical spot to keep an eye on.
And that really brings us to the final thought here. What this report shows us is that technical analysis isn't about finding one perfect magic signal. It's really more like putting together a puzzle, often with pieces that don't seem to fit perfectly. It's a game of probabilities and weighing evidence. So the real question it leaves us with is this. When you're staring at both green lights and red flags, how do you decide which signal matters most?